Well, hello and good afternoon, everyone. Welcome to another VantagePoint YouTube live session here. We are going to be diving into all things earnings related. I know there is a lot of talk coming up with NVIDIA and still some big earnings plays on the horizon, big earnings announcements from some key companies and having some additional insight into those movements in the markets and how they could potentially impact things moving forward is going to be a key factor. So certainly want to make sure we're keeping an eye on some of those key markets and key movements to expect in the upcoming weeks. In fact, we've got NVIDIA coming up in just the next couple of days, right inside of a week now. So we're going to take a look at some of that today, as well as some other earnings plays that could potentially, impact maybe even your trading as well, how to navigate around those earnings scenarios, or maybe even take advantage of some of the additional volatility that occurs prior to and even after earnings. So let's go ahead and take a look in our VantagePoint software. We're going to go ahead and just jump right on in. So I'm going to get that pulled up here for us. All right. So as we dive into the VantagePoint software here, let's make sure that everybody is just on the same page. I'm going to give you guys a couple of key pieces of information that you can take away from today to understand how to better strategize around earnings, whether it's NVIDIA, Apple, Microsoft, Meta. We've had a couple already pass, but knowing when earnings is expected to release is one key piece of information. So you need to make sure you write that down. If you don't know when earnings is coming up for some assets that maybe you're already in position on, you need to know when earnings is coming up, because it can have a major impact on the trend. So make sure that you are, again, taking that into account when you're doing your analysis. So let's talk about earnings here really quick, and then we'll work our way backwards. But before I get into the software too far, I want to make sure, do we have any new users to VantagePoint? Is there anyone who maybe just has not yet seen VantagePoint? Let me know in the chat. I'm just checking that here. So let me know in the chat if you are new to VantagePoint. That would be great. That just helps me along our session today to make sure that I can, make sure I'm answering all of the questions you guys have. You guys normally have some pretty good questions as we take a deeper dive into our session. So, all right. Give me 1 second. I think I just maybe lost my chat here for a moment, but looks like we're getting that pulled up now. So sorry about that. Gotta love a little technical difficulty, but there we go. Okay, now I can see who's in the session today. Perfect. All right. So tell me, who trades earnings? Let me ask that question. If you can tell me who trades earnings, I'd love to just kind of see who is actually familiar with earnings, or if we need to kind of back it up and see who needs to better understand what earnings are and how to navigate through those. So let me know in the chat. All right, perfect. All right, give me just 1 second. I'm sorry, you gotta love a little technical difficulty. Perfect. Okay, we're gonna get rolling here. We'll make it work, right? Because the most important part is the information that you guys need to move forward in the trade days to come. So let's go ahead and dive right into our software. So I'll, again, keep an eye on things as they come through. Go ahead and type in your questions into the chat. So let's dive on into the charts here. Now, it's really important, and let me just grab my pen. It's really important that everybody understand what we're looking at today. And if you guys notice, there's this little earnings flag down here on the bottom. This is an additional tool that you can use in VantagePoint. Some tools are optional, but this is a flag that we can turn on in VantagePoint if you choose to, and this notifies us when earnings is coming. And that is, as I mentioned, a key piece here, because you have to understand when are earnings expected to be announced, because that can have a major impact on the trend. I think that's the second time I've said that, right? So that's a hint to you that that's a very, very important piece of information, because if you notice on this example here, FTI, you can see this really was a catalyst to a much larger bullish expectation than we might have had prior to earnings. And so we're going to talk a little bit about this trend coming into earnings and coming out of earnings as well. But this flag is going to be our key indication for today that we're going to look at to identify if we have upcoming earnings. And so this flag here is in fact going to alert us if earnings is coming up within the next 7 days. So anytime you see an earnings flag, for all of my VantagePoint users out there who have the earnings flag, you will be able to see that 7 days in advance, and that will pop up right here on the side or the right hand side of your chart. So as we take a look at the just general VantagePoint indicators. Now I say general, but keep in mind, these are powerful predictive indicators that we're looking at here. So for those of you who might be new to VantagePoint, let's review these very quickly and then we'll get to our earnings, all right? So you can see here we've got a bullish crossover. Now bullish just means the market's expected to go up, all right? Meaning green up, bullish. Those are sort of interchangeable here today, all right? So you can see we've got that bullish crossover with our predictive blue line crossing above the black. Trend turns green, we can have a nice bullish, confident expectation here of the trend. But now we're not gonna just leave it at that. We're going to give some additional confirmation with our neural index down here. And this neural index, guys, pay close attention to the neural index during earnings. This is price expectancy over the next 2 days. What does earnings impact? Price, right? So if you want to know if price is expected to go up or down over the next 2 days, keeping an eye on that very accurate predictive indicator that tells you what price is expected to do might be a good idea. More than might. It is a good idea, okay? So please make sure that you are monitoring that neural index. Now, again, from our traditional type of technical analysis, earnings aside for a second, then we're going to confirm down with our predictive differences. So of course, then we have our predictive differences down here, which is a version of momentum. Momentum within the trend on a 1, 2, and 3 day time frame. Keep in mind, VantagePoint forecasts 1, 2, and 3 days in advance. So making sure that you have good momentum on that same time frame, riding right along with the trend, propelling it forward, kind of stepping on the gas, if you will, is incredibly important. So here we have 1, 2, and 3 points of confirmation to give you confidence in the next movement of this expected trend. And here we can see bullish, everything's going up. We've got nice agreement within the indicators, those predictive values all giving us that same expectation. So let's take a look at that 4th point of confirmation here, and that is going to be our predictive trade candle. The predictive trade candle right here, this is the candle in gray, shaded in red at the top, red at the bottom here in this example. That would mean our high is expected to be lower. Red is down, right? So price is expected to be down or lower. And same with our predictive low. So you can see the predictive low here is also down at this point. So red on the top, red on the bottom, both the high and the low are expected to be down or lower than the previous day. This is really important for entries as well, guys. If you know what the predictive range is expected to be for the day, then you can better time your entries, get a better entry price, right? Use the predictive data to your advantage. Use it strategically, all right? So who uses the predictive trading candle regularly? I hope everybody who's a VantagePoint user is saying yes right now, right? I'm going to check in the chat, but make sure that you are saying and answering. Hopefully you said yes if you're a VantagePoint user, right? All right. All right, so some of you have traded earnings before, right? Some of you probably have gotten, let me ask it this way. Who's gotten burned by earnings? before. Maybe you didn't realize earnings were coming up and you entered into a move and it maybe gave you a small heart attack, hopefully not, right? But sometimes that happens. But no, that's why knowing when earnings is coming is so incredibly important. So thank you, Justin, for that. But okay, so let's take it to the next level. Now, everybody knows how to read a VantagePoint chart. All right, everybody should know how to read a VantagePoint chart. Let's go through another example here. We've got a crossover bullish neural index, predictive differences to the upside. 1, 2, 3, we would check our predictive trade candle to make sure it's confirmed. And then you've got a nice bullish trend that resumes right here. So let's just take a look and you can see from crossover to crossover what our potential gains is. You've got over 12.5% in just 18 days. That's up about $4.44 per share here. So you can see that you've got a really nice trend, nice confidence in staying in and managing that position, and then a clear potential exit strategy as well. Now notice through this area of the trend, our predictive differences are sort of sideways, if you will. So without a clear direction on all three of these indications, that would tell us to be more cautious at that point. That's important to know when to avoid a trade versus when it is a good time to potentially enter a trade. And so VantagePoint will not only tell you when is it a good time, but also when might it be a little riskier. So when risk is high, you need to make sure you're managing your capital, make sure you're managing your positions, and maybe, just maybe, find something else to trade that day, right? If the setup is not there, if it doesn't meet your trade plan, don't adjust your trade plan. Stick with it if it's working for you. Adjust your mentality in making a decision that's right for that trade plan, all right? So moving right on, that goes for earnings too, by the way. So that's my full disclaimer. I'm not a licensed advisor, but I certainly am an expert at the technical analysis. And if the technicals aren't in agreement, then you should probably be very careful, right? All right, so let's go ahead. Perfect, Frank, thank you. Sounds about right, doesn't it? All right, so I'm just trying to keep up with the chat. So you guys are jumping on in, so I much appreciate that. Now, I mentioned earlier, for those of you who might just be joining in, when it comes to earnings, you want to pay careful attention to the neural index. And don't worry, we're getting to NVIDIA, I promise. I just want to share with you guys how to read these indicators. So when we jump into other markets, since NVIDIA has earnings coming up, we don't know what that reading will be yet. We have to look, but you can do that on your own if you know how to read the indicators, right? You don't need me. But we'll go ahead and dive on in to our earnings indicator. So with the earnings flag, knowing when earnings is expected to announce. All right. Now you can get additional information here from earnings. We can see the earnings expected to be reported is 0.75. Now that's a positive 0.75. So although not, incredibly high, we are still seeing a positive earnings expectation. All right. And that's from the analyst. Now the earnings reported was 0.75. The estimate was 0.65, which is the analyst expectations, all right? So the actual earnings reported was 0.75. In this case, we outperformed what was expected to happen on the estimate. Our surprise percentage means we were off by about 15.38%. That's the difference between the 0.65 and the 0.75, all right? So giving you some additional information. All of this is for your price to earnings ratio. For you to understand, do we expect positive earnings? Do we expect negative earnings? All right. So understand when earnings is expected to be released, then we also need to know what is the earnings expectation. So that's the second piece that you need to know when it comes to earnings. All right. When and how well is it expected to do, or how bad, right? Two sides of the coin. So if we take a look at the next piece, it will give you that additional information you need, which is when is earnings expected to be announced. And in this case, it's October 23rd, 2025, right? So here we can also see the day or the time of day that it's expected to be released. Now, this is important because BTO is before the open, all right? So on October 23rd, before the open, before market hours, earnings were released. So when do we think then, little pop quiz, when do you think this price action is going to be impacted by earnings? Everybody type in your chat, because I want to make sure everybody understands there's a difference between before the open, before market open, and after market close. Because when earnings impacts the price, makes a big difference in how we also read the neural index too, right? So when do we think our day of impact will be for this earnings? All right, everybody say the 23rd, right? For those of you who typed it in, thank you. For those of you who didn't, you got a freebie answer today, all right? So gold stars all around because I gave you the answer. But the day of impact, meaning the day you need to look out for, is going to be the 23rd. Why? Because on the 23rd, our earnings are released. It's being released before the market hours, all right? So we have that whole trade day for earnings to take effect. All right. So the other piece here is going to be the AI earnings index. We can see that our earnings index is 70% on this asset. So at 70%, yes, after opening on the 23rd, you guys got it. Perfect. So earnings at 70% here is giving you the accuracy of VantagePoint at forecasting earnings. All right. So yes, VantagePoint's always going to give you the accuracy here when it comes to earnings. How good is the neural index at forecasting the direction of price after earnings has been released? It's really that simple. All right. Now keep in mind, the neural index is a 2-day predictor of price. So if we would expect earnings to be released on the 23rd before the open, we would look back 2 trade days. And so here we can see that if we look down to our neural index, and I'm just going to draw this because it's important, you guys can see here, the neural index is what color here? It's green. So our price action, would we expect that to go up or down over the next 2 days, including that earnings date? Let me know in the chat. Do you expect price to go up or do you expect price to go down based off of the neural index here? For those of you who are typing in up, good job. Again, you get another gold star for today, right? A pluses all around. So if you take a look then, we can see earnings is coming up. We looked back 2 days to see what is the neural index forecasting, what is VantagePoint's predictive data here saying about earnings. And here we can see we were expecting bullishness, and lo and behold, look at what happens after that earnings announcement. Price skyrockets way up, and hopefully, you were on the right side of that move. All right. Now, that's around earnings. That's really around the specific earnings day. That is an earnings play, if you will, right? Now, there are other earnings plays, okay? Now, again, I told you guys that we were going to give you some information to take away and really put into practice. So keep in mind that when earnings are coming up, it really starts to impact the price about 21 days prior to earnings. All right. So if you notice here, you can actually see price is impacted to the downside, which we would call that earnings crush, right? Volatility to the downside is increasing here, and we have a very bearish trend coming into earnings. All right. Now, again, if you trade the downside, fantastic. Take advantage of this because we did have that implied volatility crush. Traders trying to get out before earnings with some uncertain expectations, maybe a little lower than expected. You need to make sure that you are assessing things at least 21 days prior to earnings. That kind of encompasses a period, if you will. All right. So with earnings coming up and a downtrend, then we come into the actual earnings release date, which can have a very rapid fire impact on that volatility. So you want to make sure that you have a strategy set in place. All right. Maybe you're out before earnings if you're not liking the way things are looking, or maybe you stay in if you like the way the neural index looks with your predictive differences and a crossover. These are all things kind of going in your favor here, right? But make sure you have a strategy for that high risk scenario, because let me repeat again, earnings is higher risk, and that's okay. High risk, high reward, right? But you have to be careful as well. Make sure that you're not putting too much at risk and over leveraging yourself in earnings, because it can very easily go against you. All right. So important key concept. Now, another time frame for you guys. I hope you guys are taking notes. 3 days after earnings. Typically, it's going to be a 72-hour window where we've just got to let the volatility from earnings sort of settle down. All right. If you notice, after earnings, we have a really strong up day with a lot of high volatility, and then a really strong down day. These are really large candles if we compare them to what this asset's typical range is. So you can see here, you've got a really high range during this time frame, and you can in fact add on your average true range. Does anybody use average true range at all in their trade strategies? I'm going to just plug it in here. Average true range is going to give you the typical range of the asset, or the true range of the asset over the last 14 days is the way ours is calculated here. So you can see that average true range here with this oscillating line being way up. This is a very high range for what this asset typically does on a daily basis, all right, on that average of 14 days. So we can see that this is incredibly high volatility happening here. And that's because after earnings, there is a higher volatility period where you sort of have to let that chaos die down. I like to call it the earnings grace period. Just give it a little grace to settle back down into its trend, all right? So after that 72-hour window, we can then look to see, okay, what is happening within this trend? Are we seeing continued bullish expectation? And the question you have to ask yourself here is, okay, are the predictive differences coming up? And we've got 2 of the 3 predictive differences coming up. We've got a nice bullish expectation on the trend. Those lines are spaced pretty far apart, giving us a nice strong trend. And then, of course, our neural index is also green as well. So we've come in from an implied volatility crush after earnings, a nice push to the upside, giving us a catalyst and a nice start to a continued bullish trend. Any questions on earnings or how to evaluate that from your VantagePoint charts, or even from whatever platform you're using? Some of you I know might not have VantagePoint yet. That's okay. You'll get there, right? I'm confident in that, especially as you see how these predictions can really help you navigate through higher volatility and higher risk situations like earnings as well. So let's jump into to a couple of other charts. Let's look at the big one for today. And I tell you what, while I get NVIDIA pulled up, do me a favor, drop a couple in the chat. Let me know, are there any assets that you guys want to take a look at for earnings specific today? I am going to ask to stay kind of around the realm of earnings. Maybe it's a past earnings you want to evaluate, or one that's got upcoming earnings. Let me know in the chat, and we'll pull those up. All right. So let's get NVIDIA pulled up here. I'm just going to pull up NVIDIA and open. All right. Perfect. So let's take a look here at NVIDIA. I mean, NVIDIA has just been on this kind of tear of a trend, right? I mean, we've just been up, up, up for a while, but I'm sure some of you probably were struggling here through the past week. And I acknowledge, I understand, right? It certainly can be difficult, but look how the VantagePoint software can actually help guide you through those scenarios. I'm just going to zoom in much closer here. Thanks, guys. Okay, good. We'll certainly we can take a look at gold. Gold specific or GLD? Are we looking at an ETF? Let me know. All right. Perfect. Netflix. Okay. Absolutely. We'll take a look at that next. Okay. Thanks, guys. All right. So we can see here again, we have earnings coming up on November 19th. So earnings is expected to be announced on November 19th. Do we know before the open? After market close? Let's take a look. All right. After market close. So we have an estimate of 1.7. That's a positive PE estimate. All right. That's price to earnings. And of course, we see this is coming out on the 19th, which we knew just from our flag in and of itself. But here we can see this expectation is going to be after market close. So an after market close, we look at the neural index just 1 day prior. All right. So 1 day prior is where we're going to focus on the neural index for NVIDIA. Now you can see the earnings index is 69%. So 69%, that's going to be up to you. Little risky, of course. I don't know, with accuracy and VantagePoint, I like things up around 80, even 90, 95% when it comes to earnings, because earnings can have some very rapid swings and can really impact things significantly when it comes to the trend. So again, higher risk scenario, make sure that you are keeping that in mind. But of course, we have earnings coming up with a really heavy focus on artificial intelligence here in the markets recently. Anybody trading big in AI right now? Let me know in the chat, because there are a lot of things that could happen prior to earnings. So we need to keep a look at that, keep an eye out for that, and make sure we're analyzing things from that predictive standpoint as well, because that's going to be a key piece in analyzing things moving forward. Target, gotcha, Justin. Thank you. GLD, got it. UNP, thank you guys. That is perfect. That's exactly what we needed today. So as we can see, NVIDIA, we said 21 days prior to earnings. When did we start kind of this pullback, if we will, coming from our recent high on NVIDIA? And we can see that was on 10/29, right? Definitely more of a trick rather than a treat here when we came into Halloween and just saw things kind of falling off. Now, we had some major happenings in the major markets as well, which we know NVIDIA and the NASDAQ follow each other very closely. So this impact was sort of felt just globally, right? That's the importance of those global connections as well. But we can see coming into earnings, we're seeing the sort of implied volatility crush that's coming into earnings, where we've probably got some traders, feeling like things are very, very overextended and wanting to potentially sell off prior to earnings. So, out of AI and quantum stocks able, okay, all right, gotcha. What sector is AI primarily, Justin? That's going to be technology. These are great questions coming in. So guys, keep them rolling. All right. Your questions are really what help other traders in these sessions. Sometimes traders just don't know what to ask. So your question might help them prompt another question. So truly keep them coming. I appreciate the engagement. It really just helps to make these sessions even better and give you guys the information you need. So yes, AI is in the tech sector, and we do in VantagePoint also. Let me just show you guys real quick. We'll come back to NVIDIA, I promise, but I'll leave that earnings up for you as well. You can see we also have what's called themes. So you can turn on your themes in VantagePoint. Now this is more for you VantagePoint users, but take a look at some themes in the market like cloud computing, EV, artificial intelligence. That would be a theme, right? AI, health and beauty, clean energy, real estate. You've got the S&P 500, so we can actually break it down by market. So S&P 500, Dow, NASDAQ, oil and gas, and then gold as well. So these are going to encompass many assets that are within those particular themes of the market. So a different way to break down those market sectors as well. All right. So good little tidbit for everybody there. Now, if you take a look, we're coming back on to NVIDIA now. Does anybody have questions specific to NVIDIA? I want to make sure before I move on, because I know this is our kind of crux of our training today, is upcoming earnings on some of these big plays, and NVIDIA certainly could be a catalyst to this as well. So let me know in the chat, and we'll take a deeper dive on some earnings here and evaluation on NVIDIA. All right. So perfect. And of course, Lou, give me 1 second. Yes, absolutely. The volatility on NVIDIA, right? I did say that volatility starts happening 21 days prior. So if you're not thinking that earnings is impacting the market until the day of release, you are missing out on a very big piece of information that you need in order to make an informed trade decision. So that's why those timeframes are important. Now, 7 days prior, things start to get really moving. All right. So we've got that 21-day mark, the 7-day mark, right? Then we want to look at the neural index 1 day prior for the actual announcement. And then, of course, that grace period that happens after waiting about 72 hours to verify that the trend has sort of found its way again. So those are our time frames, just to break it out for you guys. A really nice, simple way to guide yourself through earnings and make sure that you've got some checkpoints along the way at each of those time frames, so that you are properly managing and assessing risk during that earnings season. All right. So for example, let's just take a look here at NVIDIA. As we know, NVIDIA is coming up for earnings here on the 19th. We can see things starting to have some trouble here prior to our big drop off. All right. Now, I've talked to a lot of traders who were very happy that they saw the predictive differences starting to trend down. If you actually move to our more sensitive crossover. Now, I know I'm getting a little bit more advanced, and this is for you guys who like to trade on the shorter time frame as well, but VantagePoint's got a method for all of that. You can customize the VantagePoint software in case you are newer to it as well. So here we can see we actually had our 4 points of confirmation on the 4th, all right? On the 4th, we saw things were not looking so bullish for NVIDIA. In fact, we had those early warning signs where we just sort of topped out. We were hitting some resistance. For those of you who are familiar with resistance, we retested that resistance and rejected it very quickly. All right. Now, VantagePoint picks that up and it says, all right, the inner markets, the global connections, there is something shifting in NVIDIA that's driving that price down. And so we can see that VantagePoint's picking that up, crossover to the downside, neural index is red, predictive differences are all trending down. What do you do here, right? Well, you may, it just depends upon your position. You may exit out if you're a short-term trader on NVIDIA. Maybe you're holding NVIDIA long for a long period of time. Then you're probably waiting through that, right? It depends upon your position. And that's why we always say here, you need to have a plan. And it has to be your plan. It can't be what, your neighbor or your friend down the street or so-and-so that you met would do in this scenario. What would you do under these circumstances? Because when it boils down to it, you're the one making the trade decision. You're the one who's controlling your money and your finances here. So make sure that you have a plan of action in these high risk scenarios. We're up against resistance. We've got movement and momentum to the downside. Higher risk scenario, what would you do with respect to that position, right? So as we can see, we did have early warning signs that this was expecting that pullback or fall from the top. All right. So right now we're sort of in this consolidation state, right? And I say consolidation state because if you notice on our short-term predictive crossover, things are really just going sideways. And so when we're going sideways, we really don't have a confirmed direction one way or the other. And we've been kind of stuck here for a few days. So we can see that the predictive moving average is in fact trending sideways as well. So this is a clear consolidated reading, a little riskier here. Again, we do have some time before earnings, but did we see an impact from upcoming earnings? Yeah, absolutely. You can say it's the greater markets. You can say, that it's just earnings. I think it's a combination of all of it. And that's why the intermarket analysis, those global connections are so incredibly important, because to get the full story, you've got to get all the facts, right? And we can't look at things in isolation. So let's jump on over to another asset here. Again, we're going to be watching, before we do that, we're going to be watching for that neural index prior to earnings, right? And then we're going to look for that price expectation, waiting for that grace period 3 days after for the trend to sort of resume itself before making any major trending trade decisions. Everything prior to that is going to be an earnings play, right? All right, so understand the difference, because your earnings strategy may be different than your trend strategy, right? So let's dive into some of those other assets you guys had requested, and then let me know. In fact, you know what? Let me know if you guys want to know how to scan for things that are going to have earnings. Let me know in the chat. Just type in scan if that's the case, because we do have a stock screener called IntelliScan, and that can help you find additional opportunities based off of when earnings are coming up, or if earnings have already passed, so you can avoid some of that unnecessary volatility if you don't like to play earnings, right? Find assets that are going to meet your trade strategy and your setup. All right, not the other way around. So let's take a look at some of these assets. So I'm just jumping over to the chat again. I'm sorry, somebody had asked for Target, so we'll get that pulled up. Somebody had asked for GLD, which is going to be an ETF, so we won't have earnings there, but that's okay. We can still take a look at it. Abel, UNP was another one. All right, Union Pacific, transportation. All right, dun, dun, dun. Let's just take a look here. What is the I'm sorry, Abel, I just got this coming in. What is the longer term trend for NVIDIA? Let's take a look. Netflix, that was the other one. I knew that there was another one I was missing, and it was one of the majors. So let's pull that on up here. Okay, so we've got Target, Gold, Union Pacific, and Netflix. I'm going to put Gold towards the end because I do want to make sure we cover those with earnings first. So, well, Target has already had earnings pass, but let's take a look in IntelliScan when earnings is coming. So I'm just going to go ahead and open up a new scan. This is how easy it is to find this information in the software. All right. So when it comes to earnings, I am just going to go ahead and pull in our earnings index in the scan. We'll just grab them from here. Just going to grab both of them real quick and drop them in the scan. That's simple. Now I can put Target in there and just say add Target to the IntelliScan. All right, so we can say, we can see that days before is 6 days. We've got 85 days after. The estimate is 1.77, and our surprise percentage is negative 1.91%. And we are before the open on that expectation as well. All right, so if we take a look right here, we can see where earnings happened. Whew. Look at that. Now that was before the open, right? So before the open, what are we going to do? We're going to look back 2 days on the neural index. So we'd have to jump back 2 days on the neural index, right? That's 2 days. And here we have a bearish expectation on that earnings. All right. So day of impact, of course, going to impact 2 days later because it's going to be before the open. So we would then look at that bearish expectation. Now, in this case, waiting 3 days after, we'd look for that bearish trend, just writing that all the way down. After those 3 days, we get that confirmation and the continuation of that bearish trend. And that is how you navigate through earnings. Understand when it's expected to happen, what the expected outcome would likely be based on the neural index. 3 days after, allow things to settle down and identify your predictive indicators to tell you what direction that trend is expected to continue in. All right. It's really that simple. We don't need to overcomplicate it, right? We can go into deep dive on analytics and PE ratios and this and that. But the reality is, guess what, guys? In Target, VantagePoint is doing that analysis for you, right? And it's doing it on a level that you could never imagine. Now, I'm going to pull open the market details. They do like to show this. It's important that everybody understands how many assets are actually being evaluated just to get the predictions on Target alone. Okay, so if we look at Target on its own, that's our target market. Here, stocks are in blue, ETFs are in green. The yellow is going to be Forex or foreign exchange, those currencies. All right, so we have things like the yen and the dollar, the euro and the dollar impacting Target. Some of that might be obvious, right? But keep in mind, again, when you're looking at price to earnings, it's oftentimes the drivers of the market. And so that impact that market as a whole for its overall trend. And you can see VantagePoint is doing that full analysis to make sure that after earnings, after that trend has settled, you know where that market is expected to go with advanced notification of up to 1, 2, or 3 days as well. So it just incredible level of analysis being done here. All right, let's see. Okay. Perfect. Okay, so let's take a look. Oh, how to display the earnings flag on the graph. Okay, if you want to display the earnings flag on the graph, some of these indicators are optional, so you would need the earnings flag itself, but you can just go into settings and then options for that. And if you go to charts, you'll be able to see the actual earnings flag right there. So in case you're missing it, go there and look. If you've added earnings to VantagePoint software, you can, of course, take a look at that as well. All right. And the neural index comes with the VantagePoint software. So we're going to continue to evaluate that neural index. Again, we're using the earnings flag and the accuracy as well of the earnings AI index to make our session much easier today. And that's really what's going to make decisions easier, is having that information at your fingertips. And so you can see, again, we'll just get a little closer here on Target. Earnings is coming out on the 19th. We couldn't see it previously. We're just zoomed out a little too far, but we do have earnings coming up on the 19th. This is going to be before the open, so we're going to look 2 days prior to that earnings release date we're going to look at the neural index on the earnings release date. That's what I was trying to say. So looking at the neural index 2 days prior to the earnings release date to give us that anticipation. Now, guys, earnings is coming up, right? So what did we see start to happen prior to earnings? We started to see this sort of implied volatility crush. So I'm going to pull up something that could be really important, and hopefully this is game changing for a lot of you guys, is the triple cross. So if you take a look at our triple cross here, our triple cross currently is in a bearish state. Now I say that because price action, right, on Target is still below the triple cross. We have one close above the triple cross, but not another, right? So with only one close above the triple cross, we'd be slightly more cautious here when it comes to the bullish trend. We haven't been officially able to sort of break that level, if you will. That triple cross, and I'll even just make it simpler for you guys. I like a good color coding system. So you can see here on the software, the triple cross is red if it's bearish, green if it's bullish, yellow if it's consolidated, kind of that caution zone, if you will. But if we take off the short and the medium, you can see that this T-cross long acts as a level of dynamic and predictive support and resistance as well. So you can see when price action is below that level, price really just bumps its head right up against that level several times before trying to break through. And in order to break through, we really do need those two potential closes above that level to signify, again, with momentum, with your neural index and your crossover, that breakout above that level. And support and resistance is another just incredible way to use technical analysis to guide you through your trades, but maybe we'll do that on another session. So let's take a look at the triple cross current day. So we are below the triple cross, meaning price action is below the triple cross. And we've just sort of been banging our head right here on that triple cross level. This is an 18-day predictive exponential moving average. So some of you may use like a lagging 20-day. That is not going to be predictive at all. So why not use a predictive level that's going to clearly define the trend? And so we can see here we only have one close above. That would give us real caution, especially as we see our predictive differences, that momentum really shifting to the side. So we don't really have a whole lot of confidence in this breaking through that dynamic level of predictive resistance. So that would give us a signal that we could potentially still be in this bearish trend. We were just kind of coming up to retest things. Look at what happened here. We came up to retest, sat there, failed before the next retest, right? So keeping a close eye on that can also help you to navigate through the larger trend aspect as well. Again, earnings aside, but could earnings be the potential catalyst to a larger bullish trend? Again, keep an eye on that neural index as we come up and we're within that 7 days prior to earnings. And then, of course, after earnings, allow that grace period to settle down and then let the technical analysis guide you from there. So keeping it simple and hopefully giving you more confidence in those various scenarios. All right, so let's take a look at UNP. Oh, a lot, Abel. So let me repeat the question. What is the difference between the predictive and the normal 18-day EMA? What is made up of the predictive EMA? So what's the calculation, right? The calculation of the predictive EMA on the T-cross long is actually an 18-day predictive exponential moving average. So that actually has 3 days of predictive data built into that formula. Of course, it is weighted more heavily because it is an exponential moving average. So that predictive data has a heavier weight to it. Now, without getting into the weeds of the calculations, right? This is a critical level that can be used as dynamic support and resistance. So take a look at Union Pacific. Let's actually do this on this chart. Someone had asked for Union Pacific. So I'm just going to dive on in and we can see, in fact, Abel, that's a really good question because you can use the predictive EMA, that 18-day EMA, as points for reversion in a trend or pullbacks or potential breaks as well. So critical key levels where price and how price reacts at those levels can be a really good indication of where it's expected to go. Couple that with the predictive data and the confirmation from your predictive crossovers and timing indicators, and you've got really good accuracy, right? Up to 87.4% accuracy. If you guys, I'm going to take a side note just for a second, because if you guys want to take a look at more in-depth kind of studies on how to use some of these indicators and implement them together, we do a stock of the week, and I'll pull that up here in just a second as soon as we're done with our analysis and request from today. But those studies really walk you through how we're using the technical analysis and incorporating things like earnings and fundamentals as well. So I'll show you guys where to find that. Nobody let me forget. At the end of the session, we'll do that, okay? So let's take a look at that triple cross on UNP, jumping back to our charts. Using the long instead of the short. Abel, I'm just not quite sure what you mean, but you can let me know. The short term is a 1 day predictive, medium term is 2 days of predictive data, and long term is 3 days of predictive data. So hopefully that helps to answer your question. Short term is going to be more sensitive on down the line to the most conservative, which would be the triple cross, is what we have on our screen here. So all fantastic questions. Thanks so much for asking. I'm sure that cleared up some things for some other traders as well. So let's take a look at the triple cross on UNP. We have that close above the triple cross. In fact, how many closes above the triple cross do we have? I'm going to clear my drawings off. I'm going to give you guys a chance to answer that question. Tell me, how many closes above the triple cross do we have? Let me know. I'm checking the chat now, so I am gonna see if you guys have been paying attention, how good your candlestick analysis is, right? All right. So we do have 3 closes above the triple cross. All right. So this is going to be, again, one of those critical levels here. Now, if you look, you see 1, 2, 3. Now we did have a down day today on UNP. The question is then, will we be able to stay above the triple cross? All right. Now I say that because with only one close below, does that mean we're definitely in a bearish trend? Or did it mean that we had some potential short-term weakness? We don't have earnings coming up. Earnings is past, right? Earnings, we can say check that off the list. That is nowhere in the near future for UNP. So with earnings out of the way, we can look to our trends and our predictive indicators, that technical analysis to help guide us. So now we're back to our traditional rules outside of earnings. So we can see here that with just one close below, which we were expecting a fairly lower low today, with the predictive trading range as well. This is going to give you a signal that, hey, there's some shorter term weakness. You can see that in the predictive differences and the neural index. If we get 2 closes below that T-cross long, that could mean that there is a potentially significant shift in the trend, and we may be headed down for a further potential bearish movement. But we don't have that information yet. And I'm not going to speculate. I'm not going to try to out predict the predictor that's right more times than I am. That's for sure. All right. So leave it to the artificial intelligence to evaluate those levels, to show you and guide the way through the trend. Now, with a little bit more uncertainty like what we see here, might it be smart to find something else or maybe wait until you have full confirmation? Absolutely. The key here is that we do not have full confirmation at this point. Did we have it back on the short-term crossover, Abel? Yes, we did. We had it right here, which would have put us potentially at profit as well with those crossovers. Even if you got in the next day and just rode that up, right? Maybe got stopped out, you still have a fairly decent move within just a couple day time frame. That's a 3-day time frame, almost a 2% move. Some of you might say that's not enough. And that's okay. If that's not enough for you, then you just find a different opportunity. If it is, great. Take your profits, move on to the next opportunity, right? We can see how many times that happens back here. Again, looking at the crossover running up. We do have down days in an uptrend. It happens, right? But just navigating on up with that crossover remaining bullish until we get that bearish cross here. Profit calc, just a quick 8.72% in 13 days. So significant profits here, significant moves, but the key is getting in at the right time and getting out at the right time. So properly managing that position even through earnings. So here's your earnings here. Let's take a look. Earnings was before the open. So we're going to look 2 days back. Was our neural index red or green 2 days before earnings? We can see the neural index was in fact red prior to earnings, which means we would expect after earnings announcement, we would expect that market to go down. And in fact, that's exactly what happened. Price went down that day. No surprise here, right? We can see that happening directly from the artificial intelligence, that neural network, which is incredibly accurate at forecasting that price movement. All right. Can the system also work on SPY ETF? Oh, yes, absolutely. Let's jump over to that here really quickly. I don't want to skip Netflix, and I won't skip gold either, Abel. Don't worry. But I do want to open up the SPY so you guys can just see exactly how it can forecast the SPY. Any question on whether or not this can forecast the SPY? Well, I think that clears that up, right? So take a look at that triple cross view. I had this on a 9-month view, so just reach that out a little further. You can see that we, in fact, use that triple cross quite a bit to maintain that bullish trend. We touch it here. Again, I mentioned that reversion type to trade, right? Where if we stay and continue above that T-cross long with renewed bullish momentum, we've got bounces off of that T-cross line. Again, one close below and then rejects it and comes back up, continuing our trend. Same here, same here. This support holding strong through here all the way on up to current day. So we did, of course, bounce back below, but if you use support and resistance levels, you see that we did have a rejection of that support. So bounce back up, pushing us up potentially even further. And then let's jump this into Looks like my chart got pushed back just a little further. So I want to get, there we go, back over to our predictions. And we can see we jumped right back above that T cross long the following day. It looks similar to another chart we looked at, doesn't it? All right. So again, with that renewed bullish momentum, we have support with renewed momentum, with good volume or bullish volume as well. That can really help you navigate through those reversions or those dips as well. So jumping on into Netflix, we got 5 minutes, so we can do this, right? Let's jump in a little closer. I'm just going to put that on a 3-month view so we can see. We had earnings here, right? Let's take a look at earnings on Netflix after market close. So we'd be looking 2 days prior to earnings. We can see that happening here. And the question is, did price go up? Well, in fact, yes, right? It did go up. It just happened to fall the very next day, which is why it's so incredibly important for you guys to understand that you have to navigate through earnings. Be ready to take quick profits because things can jump up incredibly high, but it can also jump down incredibly low. And very quickly, the volatility around earnings is very high. I'll show you again with the ATR. We'll pull on the average true range for those of you who are familiar. Anybody, let me ask again for those of you who are just joining in, is anyone using average true range as an indication of volatility? You can see volatility incredibly high here and actually increasing coming into earnings as well. So of course, then will this trend bump back up to a bullish trend, or are we expecting that bearish continuation? And 3 days after earnings, you can see our bearish trend is still really strong. We're still continuing in that bearish expectation. 4 points of confirmation are all in alignment. If you take a look here, boom, 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 dun, dun, and there we have it. Bearish trend confirmed, right? No, nothing really to question here. You've got confirmation from the predictive indicators. Now, when are things likely coming back up? Well, we had a bullish crossover. So looking at a bullish crossover with predictive neural index, predictive differences coming on up as well, that could be an indication of that start to a nice bullish trend. Let's take a look at current day Netflix and see where we're at. Anybody have the close of Netflix today? I did not look it up. So these are just what you guys asked for. 11:54.23. All right, so 11:54.23, right? Somewhere right around here. Close enough, right? ATR with volume. Good, Frank. I'm glad to hear that. I know you're a VantagePoint user, so it makes me proud when you know how to use the indicators, right? As the head instructor, I like to certainly make sure, right? Well, good, Abel. Nothing wrong with taking profits, right? I mean, I can't guarantee that for everybody, right? But understand that when someone shares the fact that they had a big win, I want to share that with you guys. That's what keeps us going, right? So yeah, you can see even too on the short-term crossover. That's a really good point because here we have the full confirmation, right? But also too, we had earlier indications of this shift in the trend. On the short-term crossover, we had all three of the predictive differences coming up. We had the neural index and the crossover, as well as the predictive trade candle. So a nice move to the upside. And with Netflix landing at 11:54, we're still well within this predictive trade candle. Nothing fell out from under it. Just because you see a little red on your other platform doesn't mean that VantagePoint was wrong. Check to see, what did the price really do? Was it in between this predictive trade range? That's a key component, right? Is understanding, what did price action actually do? Don't take other people's word for it, right? Because you don't know what reference point they're using. And so you can see using that predictive trade candle is a critical way to assess, is this trend still continuing in that same expected direction? All right, so that's Netflix. Let's jump on into gold. We've only got just a minute or so left. Will we see a potential bounce on gold? Well, we know that gold tends to be kind of a safe haven asset, if you will. And so when markets or market conditions tend to get a little choppy or a little bit fearful, a little more volatile, gold typically does tend to do pretty well. So looking at GLD today, let me see where we're at. If anybody knows, just type it in the chat. That's the GLD ETF, guys. Type that in for me if you get it before I do. All right. Because apparently my computer wants to be a little slow. Let's just do this. VantagePoint, you can look it up right here. We can just click that little magnifying glass. I wanted to call it an hourglass, but that's a magnifying glass. We ended at 382.87, 382.87, guys. So where was our predictive trade candle? Let's just jump into a closer look. There we go. So we ended slightly above the high for the predicted low. Our predicted low was 382.58, and we landed at 382.87. So wow, that low held nice and strong, right? But that's important to know, that price is going to typically stay within that predictive range. It's incredibly accurate. So you know, if it enters in at the high, you might be a little risky because we have a potential of coming down to test the low, but getting in somewhere towards the midpoint or the low might be the better potential opportunity, because you have higher, kind of more room to run, if you will, for price to go in the right direction. So looking at gold, looking at Netflix, looking at the SPY. Now I mentioned I was going to show you guys the stock of the week. Last week was MU, so I'm just going to pull this up here, and maybe we can drop that in the chat as well. This gives you a full breakdown and analysis. We'll drop the link to the full analysis for you in the chat, because it's important you guys know what additional resources are out there for you. All right. VantagePoint provides incredibly predictive and accurate forecasts, but how do you use that? How do you apply it to your own trade strategies, to your own setups? And so that's why we have those stock of the week analysis. It'll give you a full breakdown, a full run through of the predictive analysis, as well as some additional components, in fact, many components as well. So if you guys are interested in seeing more on the stock of the week here on our live session, just go ahead and type that in for me so I know. I don't know if you don't tell me. So put stock of the week in there if you guys want to see some additional live analysis of those continued stocks of the weeks. Again, this is MU, which is what was analyzed last week. And you can see if you take a deeper dive in that link, I'm sure we'll drop in the chat. You can just take a look at what a trend this has been on recently, right? Even navigating through some of the dips here in the market. Let's just jump this over to the triple cross so you guys can really see this trend just continuing as we came out of the bearish move here. I use my crosshairs, breaking above that triple cross long, being able to stay above using those predictive indicators. Once we break below the T cross long, nice potential profits here again with key breakouts at these key levels. Once we break out and get those 4 points of confirmation, again, 2 closes above, confirmed with the neural index and predictive differences, you could potentially even get in earlier using the short or medium term crossovers as well. But on just some fantastic moves here, even with the recent volatility that we've had, MU has been able to kind of withstand that heat. And the VantagePoint indicators are guiding you through that. So why waste your time on opportunities that don't meet your setup? Use the predictive indicators to scan and find opportunities like this that you have a lot of confidence on. Trading with confidence makes the biggest difference in your trade strategies. So we'll be back next time, of course, with some additional knowledge and lots of fun here. So thanks, guys, for engaging in the chat today. And thank you for your time. It's always a pleasure, and looking forward to our next session. So we'll see you guys then.